Most people think investing is about picking the right stock. They're wrong. Imagine two people with the same paycheck. One buys hot stocks immediately. The other follows a boring sequence. 10 years later, the boring investor is richer. Not because they found the next big thing, because they invested in the right order. And order changes everything. Here's the first step. Before investing a single dollar, build a cash buffer. 3 to 6 months of expenses. It sounds unexciting. That's the point. A market crash is survivable. Losing your job during one is a different story. Second, eliminate high-interest debt. A credit card charging 25% interest is quietly outperforming almost every investment on earth. Paying it off is like earning a guaranteed return with zero market risk. Third, capture any employer retirement match. If your company matches contributions, that's instant growth. Few investments double your money on day one. Only now does traditional investing begin. Broad index funds, low fees, maximum diversification. This is where most financial influencers start the story. Ironically, it's closer to the end. Because the hidden math isn't about finding winners. It's about removing financial